Hi, I'm Ellie. In this video, we'll be going over 10 reasons why you might consider changing accountant. Changing your accountant is a big decision to make as you're essentially trusting someone new to calculate your tax liability correctly, file your tax returns on time, and apply expert knowledge to minimise your tax burden. When you're already used to working with an accountant, it may not always be obvious that it could be time to switch or that changing accountant is necessary. However, in this video, we will highlight 10 red flag signs that it's probably time to change accountant and why.
Number 1. Your accountant uses a lot of jargon that you don't understand. Talking about tax and accounting principles is a highly technical subject that is not always easy to explain. If you're regularly finding that you're unsure of what your accountant is telling you, and they're not making an effort to ensure you're on the same page, then this is a warning sign that you may want to consider changing accountants. At best, it may mean that your accountant needs to spend more time on your accounts or corresponding with you, which can lead to higher fees. At worst, it could result in mistakes that end in penalties or an HMRC investigation. Not only that, but you're likely to be left feeling frustrated if you're not sure about what your accountant is doing for you or feel uncertain about why your tax bill is the figure they have come to. Number 2. You found your accountant to be unreliable on more than one occasion. Everyone has experienced missing a deadline or reminder at some point, but for accountants, it's a far less forgivable offence. That's because HMRC won't see the fact that your accountant forgot to submit your tax return on your behalf as a reasonable excuse. Ultimately, the responsibility is still on you to check it's been done. Signs of an unreliable accountant can include much more than missing a deadline though, such as cancelling last minute on your meeting, losing your documents, or not giving you that callback that they said they would. All these behaviours will soon add up and will be a clear sign that you should work with a different accountant. Number 3. You are not a priority to them. Whilst you're probably aware that you are not your accountant's only client and that it's not unreasonable for them to be busy handling other clients' work, you don't want to find yourself in the position where you can never get a hold of them. If you've experienced yourself leaving multiple messages for your accountant to call you back, having to set up meetings weeks in advance to speak to them, or not getting replies to your emails in a timely manner, then chances are that you're not being seen as a priority to your accountant. This can often be the case if you use large corporate accountancy firms, as your own tax affairs are relatively small when compared to their overall client portfolio. Using top-tier firms ultimately does not always guarantee a high-quality service. When choosing another accountancy firm, consider how much you're willing to pay and what level of service you expect. Number 4. Your business has outgrown them. As an independent accountancy firm ourselves, we have seen this happen on several occasions. We don't see this as a bad thing though. If your business has experienced a successful growth period as well, then it should only be natural that you reassess your needs. Perhaps it may be better suited for your business to have your own in-house finance department, or it may be that you are required to appoint independent auditors for your accounts. Even if your accountant has been amazing until now, and has in a way helped you get to this point, if they're no longer able to keep up or support your growing business needs, then you can't let that stifle your growth. Number 5. You've been using the same auditor for a few years. If your business is required to have audited accounts completed, then you'll know that the purpose of the audit is to produce an independent and objective review on your processes for financial reporting. Many businesses find audits disruptive to the day-to-day operations, as auditors not only request various internal documents, but also information from key business stakeholders. Therefore, it can be tempting to use the same auditor year after year as they'll develop familiarity with your business operations. However, many will argue that familiarity may come at the cost of impartiality and lead to biased opinions. For that reason, it is best practice to rotate your auditing firm regularly. For certain businesses, it is mandatory by statute to tender for new auditors every few years. Number 6. You need fresh insight to develop your business. Does it feel like your business has reached a plateau and you're not sure how to get it to the next level? And why isn't your accountant helping? Many people forget that an accountant is a highly valuable business resource, not only when it comes to tax and accounting. Accountants work with a broad variety of business owners from all different industries, so they gain a unique insight into business development and growth. As such, you should also be working with your accountant as a business advisor. If your accountant is only giving you spreadsheets, graphs, and numbers in your management accounts, then you're missing out and should consider changing accountants. A good accountant for your business will be providing analysis, highlighting opportunities and risks, and forecasting different financial scenarios that you are empowered to make the key business decisions that will lead to growth. Number 7. They're unable to cater for your specific needs. There are many types of specialists when it comes to accountants, so if you require something specific and niche, then you may have to be prepared to find a different accountant with the experience and expertise that you need. Ideally, of course, you would only need to turn to one accountant who has complete 360 understanding of your tax affairs. This way, they'll be able to provide comprehensive and cohesive tax planning strategies to minimise your overall tax burden. For example, at Ridgefield Consulting, we offer specialist R&D tax credit services. We find that most of our R&D clients will switch from their old accountant who do not offer the service to us for their corporation tax as well. If your tax needs are more complicated, then it can make much more sense to change to a different accountant who can do it all. Number 8. You're managing your accountant. Working with a good accountant is like having a business partner or excellent personal assistant. It'll be as if they're working seamlessly behind the scenes of your business or know exactly when to provide timely reminders that they're more helpful than nagging. If this is not the case, however, then you may instead be finding that you're the one doing the reminding that your company's year end has just passed, or you're doing the follow-up as to whether they received the documents you sent in the post for your self-assessment tax return. When you feel like you're nagging your accountant to do the work that they're supposed to be helping you with, then it's another red flag sign that it's time to change accountants. Number 9. They haven't considered your future tax liability. It may not seem like a make or break when it comes to changing accountants. However, we would argue that this is one of the key differences between an accountant and a good accountant. A good accountant will not only be working to help you with your tax return for the current tax year, but will be looking ahead to spot opportunities for effective tax planning during the future years to come. It can range from something simple, such as preempting your need to register for VAT before you hit the threshold. As tax allowances and thresholds are constantly changing each year, by considering the tax implications across longer periods of time, your accountant will be able to take advantage of future planning to help save you more money. Number 10. They're not offering a good value service. Price is often the most decisive factor when it comes to choosing an accountant, despite the fact that paying a high fee does not necessarily guarantee the best service, nor does paying a low fee dictate you'll receive a poor service. Whilst it's understandable that you may rely on cost as an indicator for service levels, you need to consider what you see as good value and what is important as part of a service to you. Perhaps you value your accountant being able to do something urgently for you even though you've given them last-minute notice, or that they're happy to provide training on accountancy software so that you can manage your bookkeeping. These little acts of service are what add up to being a great service, and therefore you should expect that this makes up part of your accountant's fee. If you're unhappy with the service of your accountant and are considering changing, then don't shy away from higher fees if it means getting better value.
These are our 10 reasons we think it could be time to change accountant. Did you know that switching over to us is simple? Start by having a free consultation with one of our qualified accountants, and if you decide that you'd like to change over to us, you simply let your existing accountant know and copy us in. We then take it from there to ensure they transfer over all your historical tax information so that we can pick up where they left off. For more news advice, sign up to our monthly email newsletter or visit our website.